to really get the advanced stuff, I want to kind of start a little bit the basics. So one of the big misconceptions is your tax bracket. So if someone's in the 24% bracket, and let's say you make $100,000, if I ask someone how much they would pay in taxes, taking into account deductions and all that stuff, and moving forward, I'm not going to talk about deductions because I just want to do illustrative items here. So someone may say, hey, look, it's going to be $24,000 I'm going to pay in taxes. That's actually not the case. Most people actually pay what's called your effective tax rate because we have a progressive tax bracket. So you don't actually pay 100% of your income at the 24% mark here. You're going to pay kind of a progressive amount. So here's the tax brackets for 2024. So basically the way it works, the first 11,000, if you're single filer, you're going to pay 10% of your 10% of tax rate on the first 11,600. Then between here, you're paying 12%. Then it goes up all the way to 37%. So one of the core fundamentals of tax planning is really understanding your bracket and where you are within your bracket. Because some brackets don't have a huge jump, like going from the 22 to 24% isn't a huge deal from tax planning, but going from the 24 to 32% is an 8% difference, and that can be pretty meaningful. So let's say you're a single filer and you have an income of $200,000, 9,000 of that is going to be taxed at the 32% bracket. So maybe in that situation, it makes sense for you to say, hey, look, I'm going to save 9,000 plus into my 401k plan because every dollar I save at that rate is going to be 32% of tax savings versus, paying 24%. So that's where you can kind of manipulate and realize where you are with tax bracket. See, does it make sense? Do I need to put an extra X amount in to drop me to the next bracket? That's some of the conversations you should really be having with your accountant, with your CPA, to make sure that you're paying kind of the quote unquote right amount of taxes, or they're kind of low hanging fruit you can look at. So here's kind of an example how the effective rate versus the just normal tax bracket. So if someone's at $150,000 income, that's a 24% bracket. They would assume that you're paying $36,000 on taxes on that, if assuming that you're paying taxes at 24% on all $150,000. But in reality, your effective tax rate would be 19%. And you'd be paying taxes of roughly $29,000 because this kind of looks at your income versus what you're going to pay on taxes at each of these brackets. So you're not paying everything all at once, essentially.